Hey, what's up, everyone? It's Michael. Welcome back to Boxmining. So, a lot of movement has happened on the cryptocurrency markets. In fact, just right after my video yesterday, we had a huge pump for crypto. So, yesterday, taking a look, we had, during the video, virtually no movement. Litecoin was just barely moving at 2%. Bitcoin 0.38. It's like nothing. But right after that, we had this huge, tremendous upward arrow, huge pump. Litecoin was all the way up 30%, Bitcoin up 7, Ethereum up 12%, and a lot of people are wondering, what the hell is happening here? And I'm gonna weigh in on a few of the possibilities. So we're gonna talk about the ETF rumor. We're gonna talk about this huge Litecoin thing, and then we're gonna talk also about market manipulation. As of always, everything covered here is my personal opinion, not financial advice. Let's get straight into it. Now, obviously, the leader for this is Litecoin. The reason why, and a lot of people are hypothesizing why, is because of Charlie Lee talking about Mimblewimble. But the funny thing is, we were talking about Mimblewimble on Litecoin, and it's kind of like published on February the 2nd. So confidential transactions, Mimblewimble, and bulletproof proof extensions were all talked about before. So it was announced on February the 2nd. It's now February the 9th. And nothing really new has been added to this discussion other than, oh yeah, we're talking with the teams right there. Now, there's another rumor about this ETF. ETF will be eventually approved. That's right. So there's this leaked memo coming out apparently that, they're talking about on a roll call. They say eventually, I think someone will satisfy the standards that we laid out here. I hope so. Yes, I think so. So this is referring to the ETF. Will any of the ETFs satisfy any of the rigorous standards set by the SEC? Eventually. But, will it be in 2019, 2020, 2021? Who the hell knows at this point? We've been having so many of these ETF rumors or ETF applications and denials that we're pretty used to the process right now. Now, moving on to this whole idea of speculation, or rather market manipulation. Well, let's talk about how market manipulation could potentially work, and more specifically, let's talk about market making. So, market making is not illegal. It's a practice that's done in a lot of stock markets, and I'll talk about the legal one first. So, legally speaking, what market makers can do is they essentially close the gap between the buy and the sell orders. So take, for example, let's assume that there's a new exchange and Bitcoin prices on there. There's not much trading activity, so the gap might be pretty huge. So it might be the case that Bitcoin, you can buy it for 3,800 and you can only sell it for 3,300. So any kind of person trading on the platform be like, oh, hell no, right? The gap is so huge that it's hard for you to make an exit if you buy, or the reverse, if you sell, it's hard to sell at a good price, and you might have to move it to another exchange. So in that sense, what market makers do is they try to close the gap by having a certain number of sell orders and buy orders, and kind of just letting the market decide for the price, but just closing the gap a little bit. And we see a lot of good coins that are, well, market made. In fact, Bitcoin is probably one of the best. I mean, if you look at Binance over here, you'll see why I use Binance example in a sec. But for a lot of coins, like say BTC to USDT, you can see that the gap is just a mere few cents. And for a lot of currencies, it's a few cents. And that's what makes kind of Binance a good trading platform to be on, is because you have a lot of liquidity and the gap between the buy and the sell orders are small. So crypto market makers, you got something like GSR, they do market making and they do it for other coins. So all coins are probably in most need for this. And, the websites don't really tell you much. And that's because the less they tell you, the better, I guess, in that sense, because it's very easy to move into legal traps. Because in, a lot of market making, if you set the buy and sell orders and you then want to increase the volume, it's possible to do so by trading with yourself, but that's actually illegal. It's made illegal in the United States, and the SEC and the CFTC keeps a watchful eye on this. The reason why is because if you start trading with yourself, you give the impression that there's a lot of liquidity in the market, that there's a lot of organic volume, and you can potentially sell off, say, $1 million of Bitcoin pretty easily if the trade volume is at 1 billion. But the problem here lies in the fact that, can we catch people on crypto exchanges who can do this? And if it's even if it's illegal, people can potentially be tempted. Market makers can be potentially tempted to go to the dark side. So then we have the dark side of market making, which, well, the easiest one is to just inject a bunch of volume. And what you do is you just create 2 accounts and you trade between each other. And optimally speaking, it's best if you make an account with no trading fees. And if that's the case, you can just go and create a lot of volume. And this does happen. I mean, if you look at a lot of these cryptocurrencies, especially in the lower half, so let's say anything beyond the top 100 market cap, you can very clearly see that there are some cryptocurrencies with very suspicious volumes. Say, for example, OST, it's got 2 million trade volume per day. That's like 20% of its market cap traded per day. So obviously something is going on. I mean, you don't expect 20% volume traded. And I was actually seeing some bigger examples out there. Look at that, ADDX. It's got 13 million trade volume for $7 million market cap. So, okay. So for smaller coins, they need market making more, and market makers might be tempted to just trade with themselves to give the impression of higher volume. Now, there's even darker market making practices where they actually inject capital and try to control the price. And that's when it becomes manipulation. That's where it becomes illegal. And unfortunately, where the Chinese New Year thing comes in is that Chinese market makers, especially even in the finance sector, in the IPO sector, it's poorly regulated in the sense that this type of market making, controlling the price, that's not uncommon. In fact, there's Chinese terminology for it. So for example, 控盘, literally translated to board control. That's when you try to control the price. And then we have 拉盘, which is basically a pump, like pulling the board up. And also you have the dump, which is 砸盘, like literally breaking the board. Let's break the board. So this is terminology really used in the Chinese financial space because unfortunately the markets aren't as tightly regulated. There's a lot of connections that you can get. So even if you are caught, you can just kind of get away with it. And this is why the Chinese IPO sector isn't as hot as the American one. So you can see that Alibaba, for example, IPO'd in the New York Stock Exchange. We have recently Xiaomi, they IPO'd in Hong Kong. So it's just a lot of times they choose very reputable Chinese companies choose to do so because, well, it's more regulated or has better reputation for regulated in outside of China. But crypto in China, there's a lot of Chinese market makers there. So a lot of what they have there, a lot of their kind of techniques can be kind of imported over or done in cryptocurrencies. And in fact, if you're looking for evidence, we don't have direct evidence of this in crypto as of now. But in the past, what we do have is papers like Bitcoin price manipulation. This was talking about trading bots on mt.gox using various strategies for manipulation. And then we also have like this talk about how one person kind of pushed the price of Bitcoin from 1,500 to 1,000. So there is some precedence of this, but eventually this news comes out. There's a lag time for certain news like this. So that's why, that's why talking about it, it's hard to provide direct evidence. And usually if you can, then usually you can, prosecute a few people for that. Anyway, so where does Chinese New Year fit in all this? Chinese New Year is essentially like the Christmas of China. Everyone goes home, visits their families, and everyone gets time off. So if you're a Chinese market maker, this is the worst time for you to start market making or flipping the machine on, because obviously you want to go home and you don't want to like keep an eye on your bots, because technically bots are doing the trading, but you want to make sure you don't burn up all your capital doing so and you make money in the process. So yeah, yesterday the Chinese got off. It's right now the holidays ending here, so everyone's back to work, and potentially hypothetically a bunch of market makers can make a call to each other. Hey, let's have a meeting. Let's try to change the price of crypto. So that's very, very possible. And this is why everyone's typing, oh, Chinese New Year, because like the Chinese are back at the market making game. Now that makes Chinese people sound like super horrible, but I just want to kind of say that this is out there, that like market making is pretty strong in the cryptocurrency space, especially when there's very little volume. Then market makers and liquidity providers can control a lot of what's happening. And in many ways, this is why I don't really trust TA at this current point. Because in TA, you're looking at a lot of the volume, look at a lot of prices, but these can all change. A market maker can potentially remove a giant sell wall and then cause prices to shift. And more importantly, they can just flip a button and say, oh, look, yeah, look at that volume. Boop, 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 boop. They can just type that in and yeah, volume explodes. And that's it for today's episode. So I talked a little bit about market making. I know it's depressing as hell. It made me pretty much depressed when I talked about it. But what I feel is that in this space, when in young markets, it's easy to manipulate. But as the market grows, it's harder and harder to manipulate. So we are growing. Crypto is a growing market. More people are understanding. And eventually we'll get to the point where we do become much more transparent, especially with the DEXs coming into play. Then you can know exactly who's doing what. So a lot of good stuff is coming into the crypto space. And well, personally right now, if you're afraid of manipulation, then just dollar cost average. And guys, remember the giveaway is still on right now. So in videos, what's happening is that there's this QR code. You scan that with the Engine wallet and you get a Boxmining NFT. And that's it for today's video, guys. Thank you guys so much for watching. See you guys next time.